Let me tell you a story about a bet. A bet that changed the history of financial markets forever. A bet that proves almost everything you believe about trading success is wrong. In the 1980s, there were two legendary traders in Chicago, Richard Dennis and William Eckhart. They were partners and close friends, but they had a fundamental, almost philosophical disagreement about what made a trader successful. William Eckhart believed that trading was a gift. He believed that successful traders were born with a special intuition, a mysterious sixth sense, for the markets that simply could not be taught. You either had it or you didn't. Some people were born to read the markets like Mozart was born to compose symphonies. The rest of us were just spectators. Richard Dennis disagreed violently with this idea. He believed that trading was not an art. It was a science. He believed that there was nothing magical about what he did. He followed rules. He followed a system. And he was convinced that if you gave any person, no matter how average, no matter how inexperienced, a precise set of rules and they followed them without deviation, that person could become a millionaire. The two men argued about this for years. Finally, they decided to settle it with an experiment. They would put Dennis's theory to the ultimate test. Richard Dennis took out an ad in the Wall Street Journal and Barron's magazine. He was looking for people to train. He received over 1,000 applications. From those, he selected a group of random individuals. Not finance professionals. Not MBA graduates. Random people. He hired a waiter who served tables at a restaurant. He hired a professional blackjack player. He hired a dungeon master for Dungeons and Dragons, a fantasy role-playing game. He hired a failed actor. He hired a security guard. He hired people who had never looked at a stock chart in their lives. These people knew absolutely nothing about financial markets. They weren't geniuses. They weren't economists. They weren't mathematicians. They were ordinary people with ordinary jobs and ordinary lives. Dennis gave them a strict, mechanical set of rules, a complete trading system. He taught them for 2 weeks, just 2 weeks. Then he handed them real money to trade. The rules were simple and explicit. If the price breaks above this level, you buy. If it drops below this level, you sell. You risk exactly this percentage of the account. You exit here. No exceptions. He told them something that most traders refuse to accept. Do not think. Thinking is the enemy. Just follow the rules. He called this group the Turtles, named after the turtle farms he had visited in Singapore. He believed he could grow traders like farmers grew turtles. The result of this experiment? Over the next 4 years, this group of random nobodies earned over $175 million. Read that again. $175 million. The waiter became a multimillionaire. The dungeon master became a hedge fund manager. The failed actor became financially independent. These were not exceptional people with exceptional talents. They were average people with an exceptional system and the discipline to follow it. This story proves the most uncomfortable truth in all of trading. You are not the edge. Your intelligence is not the edge. Your hard work is not the edge. Your experience is not the edge. Your feel for the market is not the edge. The system is the edge. And the discipline to follow it is how you capture that edge. And yet, look at how most retail traders operate today. They are smart. Many of them are highly intelligent doctors, engineers, lawyers. They work incredibly hard. They study charts for hours every single day. They read books. They watch videos. They take courses. But they lose money. Consistently. Predictably. Inevitably. Why? Because they are trying to be William Eckhart's natural-born genius instead of Richard Dennis's disciplined robot. They learn a strategy, but then they add their own flavor to it. They add their judgment. They add their experience. I know the rule says buy here, but it feels overextended. I'll wait. I know the rule says sell here, but the news looks positive. I'll hold. I know the rule says risk 1%, but I'm really confident about this one. I'll do 5%. This is discretionary drift. It sounds innocent. Sounds like wisdom. I'm using my judgment. But here is what it actually is. Contamination. The moment you deviate from your rules based on how you feel in the moment, you have stopped trading and started gambling. You have taken a system with a proven mathematical edge and injected it with the virus of human emotion. Fear, greed, hope, ego, revenge. These are the emotions that drive discretionary decisions. And these emotions have no place in a probability game. If a group of completely random, untrained people can make $175 million by simply following instructions like robots, surely you, with all your intelligence and education, can become profitable. But only if you stop trying to be the hero. Only if you accept that you cannot consistently outsmart the market. No one can. But a system can beat the market. A system plays the probabilities over thousands of trades. A system doesn't get scared. A system doesn't get greedy. A system doesn't revenge trade at 2 a.m. because it's angry. Your only job is to get out of the system's way. To stop interfering. To stop adding your genius to a machine that was working perfectly before you touched it. Chapter 1. The Artist versus the Franchise. Why Systems Win. To truly understand why systematic trading is the only path to sustainable generational wealth, we need to step outside of trading for a moment and look at business models. Think about how most struggling traders view themselves. They see themselves as artists. The artist relies on inspiration, on creativity, on feeling the flow. Every morning, the artist wakes up, looks at the canvas, the chart, and tries to channel some mystical energy. Some days, the artist is in the zone. The muse is with them. Colors flow effortlessly onto the canvas. They paint a masterpiece. They make a huge profit. They feel like a genius. Other days, the artist has writer's block. The muse is absent. They stare at the blank canvas and feel nothing. They are paralyzed by fear. They hesitate. They miss trades. They watch opportunities pass by because they didn't feel right. Or worse, the artist has a manic episode. They are overflowing with chaotic energy. They get greedy. They splash paint everywhere without thought. They take 10 trades in an hour. They abandon all technique. And they ruin the canvas completely. They blow the account. They destroy months of progress in a single afternoon. The artist model is fundamentally unscalable. It relies entirely on the mental and emotional state of the human being. If the artist is tired, the business fails. If the artist is stressed about their marriage, the business fails. If the artist is distracted by the news, the business fails. You cannot build wealth on a foundation that fragile. You cannot retire on inspiration. Now let's look at a different model. Let's look at McDonald's. McDonald's is not an artist. McDonald's is a franchise. McDonald's does not rely on having a genius chef in every single one of its 40,000 locations around the world. In fact, if you've ever been to a McDonald's, you know who they hire. They hire teenagers. They hire people with zero cooking experience. They hire people who couldn't tell the difference between a soufflé and a sandwich. And yet, somehow, McDonald's generates billions of dollars in revenue every single year. Consistently, predictably, in good economies and bad economies. In every country on earth. How is that possible? How can a business built on unskilled minimum wage labor produce such consistent results? They have a system. The McDonald's operations manual is legendary. It specifies everything in excruciating, mechanical detail. The fries are cooked for exactly 3 minutes and 10 seconds at exactly 335 degrees Fahrenheit. Not cook them until they look golden. That is subjective. That requires judgment. 3 minutes and 10 seconds at 335 degrees. That is objective. That requires only a timer and a thermometer. It doesn't matter if the teenage employee is having a bad day. It doesn't matter if they broke up with their boyfriend last night. It doesn't matter if they hate their job and can't wait to clock out. As long as they press the button, set the timer, and wait, the fries come out perfect. Every single time. In Tokyo, in New York, in a small town in Iowa, the system removed the human variable. And the human variable is the liability. Systematic trading is the decision to stop being a struggling artist and start running a profitable franchise. You are not trying to paint a masterpiece every day. You are trying to cook fries. You want a trading business that prints money regardless of how you feel on any given morning. You want to franchise your edge. If RSI is below 30 and price closes above the 200 EMA, I buy. I risk 1%. My stop is at the swing low. My target is 1.5 R. That is your 3 minutes and 10 seconds at 335 degrees. It is boring. It is repetitive. It is mechanical. There is no room for creativity. There is no room for self-expression. And that is exactly why it works. A system removes the dangerous, irrational, emotional human from the equation. The human gets scared when price drops. The system doesn't feel fear. The human gets greedy when price spikes. The system doesn't feel greed. The human revenge trades at midnight because they are angry. The system doesn't feel anger. The system just executes. Input leads to output. Condition met leads to action taken. If you want excitement, go be an artist. Go to art school. Paint your feelings. Suffer for your art in a cold apartment. If you want wealth, be a franchisee. Cook the fries the same way at the same temperature for the same duration every single time forever. The choice is yours, but only one of those paths leads to financial freedom. Chapter 2. The Anatomy of a Machine, the 4 Pillars. So what does a real system actually look like? How do you know if you have one? Most traders believe they have a system, but when you ask them to describe it, what comes out is vague and fuzzy. I trade breakouts on the trend line. Okay, which trend line? The one you draw or the one I draw? How do you define a breakout? Does a wick count? Or does the candle need to close above? What time frame? What if it's a Monday versus a Friday? I buy support and sell resistance. Great. How do you define support? Is it a level that was touched once? Twice? 10 times? How much of a bounce qualifies? These are not systems. These are vibes. They are vague ideas that sound good but crumble under the pressure of live trading. A real system must be binary. It must be a series of yes/no questions that leaves absolutely zero room for interpretation, opinion, or feel. Here is the ultimate test. If you cannot write your rules on a napkin and hand it to a complete stranger, someone who has never traded before, and have them execute the trade exactly the way you would, you do not have a system. A robust, wealth-generating system stands on 4 non-negotiable pillars. If any one of these pillars is missing or weak, the entire structure collapses. Pillar 1. Entry rules, the trigger. Your entry rules must be completely objective. There should be no room for interpretation. Bad rule. Buy when momentum looks strong. What does look strong mean? Strong to you might be weak to me. This is subjective garbage. Good rule. Buy when the 5-minute candle closes above the previous session's high, and the 20 EMA is above the 50 EMA, and volume is 150% of the 20-period average. Objective. Measurable. Binary. There is no "it looks good." It either happened or it didn't. The candle either closed above or it didn't. The volume was either 150% or it wasn't. A stranger could check these conditions and get the exact same answer you would. Pillar 2. Exit rules, the escape. You must know exactly where you are getting out, both in profit and in loss, before you ever enter the trade. Most traders enter and then say, "I'll see how it reacts," or "I'll manage it in real time." That is not a plan. That is a prayer. That is suicide. You are handing control to your emotions. And your emotions are terrible at making financial decisions. Your stop loss and take profit must be predefined coordinates. They are the GPS destination entered before you start driving. Stop at the swing low -5 pips. Target at the next resistance level or 2R, whichever comes first. No ambiguity. No feeling it out. Pillar 3. Position sizing, the defense. This is perhaps the most important pillar, and the one most often ignored. A fixed mathematical formula must determine your risk. I risk exactly 1% of my account equity per trade. Or, I trade 0.5 lots per $10,000 of capital. Never, ever. I feel really confident about this one, so I'll bet big. That is the artist talking. That is ego talking. and ego destroys accounts faster than bad analysis ever could. The franchise risks the same amount every single time. Why? Because the edge only reveals itself over a large sample size. You need to let the probabilities play out. And you cannot do that if you are blowing up on trade number 17 because you felt confident. Pillar 4. Trade management, the flow. What do you do while you are inside the trade? This must also be predefined. Do you move your stop loss to break even? When exactly? After price moves 1 are in my favor, I move stop to entry. Do you take partial profits? I close 50% at 1R and let the rest run to 2R. Do you trail your stop? I trail using the 20 EMA on the 15-minute chart. All of this is decided before the trade is live, not while you are staring at the screen with your heart racing. If you move your stop because you are scared, you broke the system. If you close early because you are anxious, you broke the system. If you hold longer because you are greedy, you broke the system. If you are missing even one of these 4 pillars, or if any of them is vague or subjective, you do not have a system. You have a gambling habit disguised as a strategy, and the market will eventually find that weakness and exploit it mercilessly. Chapter 3. The black box, the cost of deviation. Why is following the system so absolutely critical? Why can't we just use our judgment sometimes? After all, we are intelligent people. We have experience. Surely our intuition is worth something? This is the trap that kills traders. Because when you break your rules, you don't just lose money on that one trade. You lose something far more valuable, far more irreplaceable. Data. Let me explain with a powerful analogy. Imagine a commercial airplane crashes. It's a tragedy. Investigators rush to the scene. The first thing they look for is the black box, the flight data recorder. The black box contains all the data about what happened during the flight. The altitude, the speed, the pilot's inputs, the engine performance. Investigators need this data to understand why the plane crashed. Because if they understand the cause, they can prevent it from happening again. They can fix the fleet. They can save future lives. Scenario A: systematic loss. The pilot followed all standard operating procedures perfectly. Every checklist was completed. Every protocol was honored. But the engine failed due to a manufacturing defect. The black box data reveals engine malfunction, metal fatigue in turbine blade. This is incredibly valuable information. The engineers can now recall all planes with that engine type. They can redesign the blade. The next generation of planes will be safer. In trading terms, this is a losing trade where you followed your rules perfectly. The trade lost, but the loss gives you data. My system struggles when the market is choppy and range-bound. My system gets stopped out frequently on Fridays before major news events. You can now take this data and tweak the strategy. You can add a filter. You can improve. Scenario B: discretionary loss. The pilot got scared during turbulence. He ignored the instruments. He overrode the autopilot. He pulled the lever at the wrong time and crashed the plane. The black box data reveals pilot error, manual override during standard turbulence. This data is useless for engineering purposes. The engine was fine. The wings were fine. The plane was perfectly functional. The pilot just panicked and made a bad decision. You cannot fix the plane because the plane wasn't the problem. The human was. This is the devastating trap of discretionary trading. When you deviate from your rules, you corrupt your dataset. You have a losing month. Was it because your strategy is fundamentally broken? Or was it because you moved your stops on 12 trades? Or because you skipped 8 valid entries because you didn't feel like it? Or because you revenge traded after a loss? You don't know. You are flying completely blind. You cannot learn from your mistakes because you don't know what the actual mistake was. You cannot optimize a system if you don't follow it consistently. You are just experiencing random outcomes and calling it trading. Systematic trading is the only way to generate clean, usable data. If you follow the rules 100 times and lose money, you have learned a powerful, valuable truth. This specific system doesn't work in current market conditions. You can confidently discard it and move on to develop a better one. If you break the rules 50 times out of 100 and lose money, you have learned absolutely nothing. You are just a gambler who had a bad run. You don't know if the system is bad or if you are bad. Do not pollute your black box with pilot error. Follow the rules religiously so you can trust the data you generate. Without clean data, you can never improve. You will be stuck in the same cycle of failure forever. Chapter 4. The Sentry Turret, the Identity Shift. To truly become a systematic trader, you need more than just a rulebook. You need a complete personality transplant. You need to change how you see yourself. You need to stop trying to be a sniper and start being a sentry turret. The discretionary trader believes he is a sniper. He lays in the grass for days, camouflaged, motionless. He waits for the perfect shot. He accounts for the wind speed, the humidity, the rotation of the earth, the target's breathing pattern. He puts immense, crushing pressure on himself. I am the expert. I have trained for this moment. I have to be right. When he takes the shot, his ego is on the line. His identity is at stake. If he hits, he is a genius, a hero. If he misses, his ego is crushed. He spirals into self-doubt. He questions everything. The systematic trader is not a sniper. The systematic trader is a sentry turret. Think of an automated defense turret from a science fiction movie. It sits on top of a wall or a building. It has a simple piece of code programmed into its processor. If motion detected in sector 4-fire. That's it. That's the entire program. The turret doesn't care who the target is. It doesn't care if it's raining or sunny. It doesn't care what day of the week it is. It doesn't feel hesitation before pulling the trigger. It doesn't feel regret if it misses. It doesn't feel euphoria if it hits. It doesn't get tired. It doesn't get bored. It doesn't get distracted. It just executes the code. And after firing, it resets. It returns to neutral. And it waits for the next motion detection. Input-reaction. Input-reaction. Repeat forever. You must become the turret. You are not the trader anymore. You are not the decision maker. The system is the trader. The system makes all the decisions. The system has the edge. You are just the hardware. You are the mechanism that translates the system's signals into clicks on a mouse. Think of yourself as a data entry clerk. Your job is to sit at the computer, wait patiently for the system to say, condition met, buy, and then you input the order into the broker platform. That's it. That's your entire job description. This mental shift is incredibly liberating. It removes the immense psychological pressure that crushes most traders. You aren't responsible for predicting the market. You aren't responsible for being right. You are only responsible for executing the order correctly. If the trade loses, it's not your fault. It's not a reflection of your intelligence or worth as a person. It's just the system's cost of doing business. It's a necessary expense within the expected statistical distribution. You sleep better at night because your ego is not on the line. You are just the operator of the machine. You are the person who presses the start button on the factory assembly line. When you truly internalize this identity, when you stop seeing yourself as a genius analyst and start seeing yourself as a humble system operator, everything becomes easier. The anxiety fades. The second-guessing stops. The emotional roller coaster ends. Conclusion. Boring is profitable. Let me leave you with this final, uncomfortable reality check. Real, sustainable, wealth-building trading is boring. It is not exciting. There is no adrenaline rush. There are no stories to tell at dinner parties. It is repetitive. It is mundane. It is mechanical. It is checking boxes. It is waiting. If your trading is exciting, you are doing it wrong. If your heart is racing while you are in a trade, you are gambling. If you are checking your phone every 5 minutes to see your P&L, you are addicted, not invested. If you are having fun while trading, you are paying for entertainment, not building wealth. The turtles didn't make $175 million because they had fun. They didn't make it because they were geniuses. They made it because they were disciplined enough, patient enough, and frankly, boring enough to do the exact same mechanical thing over and over again every single day for 4 years straight. They cooked the fries at 335 degrees for 3 minutes and 10 seconds. Thousands of times. Without variation. Can you do that? Can you be that boring? Can you surrender your need for excitement, your need to be right, your need to feel like a genius? The market is a vast, chaotic ocean. It wants to drown you. It wants to confuse you. It wants to trigger your emotions and watch you make mistakes. Your system is your raft. The raft is made of rules. Sturdy, boring, predictable rules. Sometimes the waves will be high and terrifying. You will want to jump off the raft and swim. You will think, I am a strong swimmer. I can navigate these waters better on my own. I don't need this clumsy raft. Do not let go. If you let go of the raft to show off your swimming skills, the ocean will swallow you whole. It always does. Hold on to the rules. Even when it's hard. Even when you are losing. Even when every instinct screams at you to do something different. The rules are the only thing keeping you alive. Be the franchise. Cook the fries the same way every time. Be the turret. Execute the code without emotion. Be boring. Embrace the mundane. And eventually, inevitably, mathematically, you will be rich.